You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody, that music means it is time, once again, for a little program we like to call around these parts Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as from this fine network upon which you're listening to this fine program right now. Glad to see so many of you are enjoying not just Vol Views, but all the shows we're putting out throughout the week there. Playbook Radio, you got the Advisors Option, Boot Camp back every week, Option Block, a bunch of fun stuff, TWIFO baked into the mix there, the interviews, all sorts of cool stuff hitting the network. Pretty much something, at least something every day, if not more than that. So glad to see you guys are taking it all in and enjoying it. Make sure if you are enjoying it, keep those reviews coming in those platforms you use to listen to. That keeps the new people discovering. We've seen so many people discovering the network just over the past few months alone. So keep that influx coming. These are important times to have, I think, a relatively sane source of financial content. I think we've established ourselves, at the very least, at that. It's a low bar, but I think we hit that at the very least over the past 13 plus years. So if you like what you're listening to, leave those reviews and those platforms of choice. And, of course, keep those questions coming. We do love to hear from you guys. And joining me on the old program today, first, joining us in the MIAX hot seat today, Mr. Tom JARCK, the volatility product specialist over there at MIAX. Tom, welcome back to Volatility Views, sir.
Thanks, Mark. Happy to be back. Just as we're speaking here, I just see the tape rolling over a little bit. Are we bringing good news or bad news to the markets here? But glad to be back. Thank you.
Yeah, what's the old saying, right? If you don't like the weather, it applies to the markets now, too. If you don't like the markets, just wait 5 minutes. And you never know where we're going to be. We're in that type of environment. And we have been for some time. And also joining us from the land of the pit, the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com, by way of Carmen Lyon Capital. Mr. Meatball, welcome back to Volatility Views to you as well.
Yeah, good to be here. Excited. I hear we've got some troublemakers on the show today, so I'm a little nervous, but good to be here on this lovely Friday.
Guard your wallets today. Guard your Vol ETPs, more importantly, because we're also joined double duty today in the guest chairs by old friends of the program, even though they haven't been on in a while. In fact, our keen-eared producer checked before the program. It's been almost exactly a year. The last time they were on was June 21st of last year, so pretty much doing their annual appearances, are our old friends, the Thompson twins, a.k.a. Matt and Mike Thompson, now the managing partners over there at Thompson Capital. Gentlemen, welcome back to Volatility Views. It has been too long.
Yeah, thanks. No wonder my elbow was twitching, Mark. It hadn't been a year since we were on your show.
You got that itch, which is the word spot to get an itch, but hey, we don't judge here on Vol Views. You know, it's been about a year. Obviously, a lot has gone on since the last time we chatted, not the least of which pretty much the entire world has fallen apart. But we're still here. We're still doing the show, still living out here. So catch us up. What's going on, including this new Thompson Capital. And by the way, may I say I'm deeply disappointed you did not go with Thompson Twin Capital. I think that would have been a great moniker. But hey, who am I to judge? But catch us up. What have you guys been up to over the past year?
Yeah, I suppose we could always do a name change, but yeah, so Thompson Capital, very original name of our firm. So Matt and I started our own RIA last year, a little over a year ago. So we named it after us just because we couldn't come up with anything else cool. But that's probably the biggest, one of the bigger things that we've done in the last year is start our own firm.
Primarily because I wouldn't let him have the rights to Sebastian Capital as much as they wanted it.
Or the Greasy Meatball Fund. I heard that was a hotly contentious item as well.
Yeah, too expensive.
All right. Well, with the gang assembled then, a nice big gang today. It's fun. Let's dive right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the program where we break down the week that was and indeed still is from a vol trading and trending and analysis and unusual activity and order flow, all sorts of fun perspectives. People always ask us who come on the show for the first time. They're amazed we prepare so much. And then B, how come you don't prepare even earlier? They want the stuff like days ahead of time. And days like today are a good example. Why you can't really do that on a program like this because you wait 5 minutes and the worm has turned yet again, because coming into earlier in the session, it seemed like yet another mixed day on a pretty much mixed week out there, and neither camp really could seem to find their footing. The Bulls were in charge for a little bit, then the Bears were in charge, and back and forth. We had dire news, of course, China and India ratcheting up tensions, the exacerbation, continued spread of the pandemic, and also some decent news on some of the domestic economic front. So things seem to be pushing in place. Of course, the Fed stepping in there, cheering up everybody, doing the next best thing to just buying up shares themselves, which, of course, going out and buying corporate debt out there. So that gave the market a nice lift. So we were in that kind of weird mixed end to the week, and now it seems that worm is turning yet again, because coming into the start of the show now, we're seeing most of the major indices firmly in the red. NASDAQ actually the laggard today, off a little more than 0.5%. The S&P closing in on off a full percent. Not quite there yet, but wait 5 seconds, it'll be there. And then the Dow off over 1%, about 1.15%. So a lot of this worm seems to be turning here to the dark side. Coming into showtime, we saw our old friend VIX Cash was trending shy of the 33 handle, now back up to about 33.5. If this trend continues, probably be moving up even higher than that. That puts it still down from where it was last week, about 6.25 points. So well off those highs. But hey, we got a whole hour here for a nice little rally in vol to occur to catch me up to my vol prognostication from last week. Spikes at about a similar level, about 33.25. That puts it down about 7.25 handles from where it was this time last week. And our old friend VVIX, aka the vol of vol, holding firm right around a 137. That puts it down a whopping 18 points from where it was last week. So that's an interesting table that we've set. And of course, that table setting may change as the show evolves. But let's start with our guests out there, Matt and Mike. I know you guys have been kind of busy over there on the vol front since the last time we chatted. But what's been lighting up your tape? Maybe before we even get to this week, it's obviously been an insane couple of months out there ever since the pandemic in March. So maybe walk us through that first. What has it been like? You guys, obviously, for those who don't know, you guys focus very micro-focused on the VIX futures curve out there. So walk us through what that's been like over the past few months. And then, of course, bring us into this week. And what are your thoughts on yet another topsy-turvy end to another topsy-turvy week?
Yeah, well, it's been so relaxing this year. That's the nice part. You know, just barely anything happening.
Nothing happening at all.
Right. So obviously, yeah, the COVID thing is the major story for this year. And we watched like a little rumbling happen in the VIX complex in January. And then I think the weirdest move still to me this whole year was the move by the S&P in early February to go to all-time highs as like China's fallen apart with all of their COVID cases. And in that little period, vol kind of came in but didn't get crushed there. And then then the big rollover happened in March. So it's been a good year for us for the way we trade. That VIX curve really helped get our positioning right this year. So we've hedged really well, and on the long short vol strategy, Alpha Seeker, we've done nicely there too. Just watching that VIX curve. So as of today, it's just wild that we're just rattling off this like, oh yeah, VVIX is 130, spot VIX is 35, and we get this curve way up here at crisis levels. So we're still seeing a lot of hesitancy in the VIX, and obviously random acts of violence. Like last Thursday, S&P goes down 6% out of nowhere. So it makes sense that vol is going to be bid here for a little while to us.
Has it been a good season out there for mullets and Tulums? And you mentioned also the Alpha Seeker. I think a lot of our listeners are more familiar with your various haircut style-oriented strategies. Well, catch us up. What is the Alpha Seeker? What are you guys doing out there?
So Alpha Seeker is a long-short volatility strategy that we've been running for a number of years, since 2011. And it generally uses the vol ETFs just to go long or short volatility based on the VIX futures curve. So that's like our flagship product, the way we use the VIX curve just most directly.
What was funny, Mark, was on that February 20th, the Thursday before the big bad Monday, there was like that random midday S&P sell-off. And Mike and I want to say we were literally on the phone just catching up when that happened. And we both are like, what the hell was that? And that, do you remember this, Mike? And like,
yeah, I definitely remember this.
Yeah. And we're like, what the hell just happened? And then it rallied right back. And we were both like, it was funny because he and I are like, I'm getting the heck out of the way of this thing. And he's like, we're both like simultaneously like, yeah, no, this is an absolute get the hell out of the way. And, so I went into cash. They got long vol. It was really just a very timely discussion, and you guys have had a lot going on top of Alpha Seeker. I know that the big news, and I don't know if we're going to get to that's on the plan, is you guys have for those that don't want to go through the process of opening a huge account at Thompson Capital, though totally worth it because they're great managers. You can just go in and get Alpha Seeker via an ETF now, correct?
That's correct.
Why don't you tell us a little about that?
Yeah, so recently we launched an active ETF, MSVX, and it is, according to the prospectus, substantially similar to our Alpha Seeker SMA strategy. So that is what that ETF is. Actively manages volatility exposure based on our signals from the VIX futures term structure.
I like it. So yeah, listeners, check it out for yourselves. The ticker, as you mentioned, MSVX out there. So if you've listened to their appearances in the past, you've heard us joking many times in the past about their, as I term them, their haircut-based strategies, the mullet and the Tulum. Now you can get access to some of that yourself, and you don't have to worry about switching back and forth because they'll do it for you. Now, it's obviously, shall we say, interesting times to launch a new volatility-based product. What's it been like managing and launching and trying to shepherd and grow AUM in this new product in the midst of a pandemic and a trade war and all the other madness we've seen over the course of the past few months, guys?
How long is this show going to go?
We've got a few minutes left, I think. A few.
Yeah, put it this way. Our original launch date was supposed to be end of the year. And it kept, just there is a lot of operational and regulatory stuff that goes on behind the scenes. So no wonder these kind of launches slip and that sort of thing. And then really with the market turbulence in March, the new issue market for, ETFs, ETNs, even IPOs was essentially frozen shut. everyone had to adjust to, market makers and that kind of thing had to adjust from working remotely. So there was really a full stop in the new issuance market back then. But yeah, it's, nothing truly rewarding is going to be without its challenges, and we've finally gotten to the other side.
And how has the response been? Obviously, these are unprecedented times and these are difficult challenges, but have you been able to get some attention throughout all the noise of the madness? Because there certainly is volatility to be found out there, and there certainly is interest in volatility right now. So maybe, conversely, given the fact that everyone's at home and fixated on the markets right now, there could be an influx of interest into your product. What are you guys seeing in the early days?
Yeah, so we're pleased with the launch. I think the AUM is right around 33 million. It would have been nice to be on the market back in early February, so you could make more of a splash. But yeah, we're definitely pleased with the launch and how things are going.
Glad to hear that. I know you guys have been working on this diligently for some time. One of the reasons why you haven't been on in a while, I know it's in the early, especially in the lead up to launching a new product, sometimes the regulators get a little dicey about what you can talk about. But I'm glad you guys are back on and you could talk about mullets and Tulums, at least through the lens here of MSVX. There you go, listeners, all the ones who are hitting us up all the time. Man, I want something new to trade and to play with and sink my teeth into in the vol space. There you go, MSVX, if you want to dig your teeth into all things alpha through the lens of the VIX futures. Mr. Meatball, same question for you, sir. Obviously, another tumultuous week and looks like another tumultuous end to a tumultuous week out here. What's been lighting up your tape, and what are the crazies in the pit chat? What are they trading this week?
Yeah, there's a lot going on. And just to kind of put a period on the MSVX point, a lot of people ask us, hey, is there an ETF that I can, just be short and forget about? And, we had a discussion about ZIV last week. We had a discussion about, you want to have, that volatility exposure, but you don't want to blow out your account. One of the things I like about this as an ETF is that it actually is kind of, now, it's not a straight short ETF, right? Because they have signals that send them long volatility. But if you're looking for a way to have relatively low actual volatility while taking advantage of volatility, that is what this ETF is designed around, and why I'm kind of excited that they're able to launch it. Now, from my end, it was interesting. As soon as the big news driving everything today is the Apple starting to close stores again, and that is what kind of sent markets south. And, as we are talking, I think we're going to go lower and lower. And, it was amazing. As soon as markets started to turn red, liquidity completely dried up. Nobody wants to fill anything. Nobody wants to trade anything except for on the bid of the offer. So for all the money being pumped in, the big thing I can say is that market maker liquidity still sucks, except for actually having the floor back. I'm having an easier time getting decent fills in VIX and SPX than I was a few weeks ago. And so that's been helpful. But I can say that, with this turn, liquidity is completely dried up. It's amazing when on these kind of face ripping rallies, you can buy anything you want or sell anything you want. But as soon as the market vol starts to catch a little bit of a bid, it's amazing the way everybody just runs for the hills. My younger son's been watching a lot of Finding Nemo and Finding Dory, and the way market makers are making markets right now is a lot like the scene with the crabs hiding from the squid, where they poke their heads out to say shut up to Dory, and then poke their heads right back under their hiding spot so the squid doesn't eat them. And that's the way the market kind of feels right now. It's every market maker, liquidity provider, trader is terrified of a leg lower, because unilaterally the smart money does not trust this rally.
Yeah, if it's any indication, I saw a picture of a guy on the SPX floor this week with wearing a neck brace. Looked like he'd been injured.
I like it. I should mention, coming into today, we had some other interesting nuggets to parse coming into what seemed like it might be kind of a weird mixed end of the week. Again, so far, not looking out that way, probably driven, as Mark said, by the Apple news out here. But, of course, we've been talking for a while on TWIFO about the recon going on, so the rebalancing out there in Russell. But we neglected to talk about what's going on today out the S&P, which is, of course, they're actually rebalancing again. They delayed it back in March. It was originally scheduled for March 23rd. I wonder why they wouldn't want to do it at March 23rd. What could possibly have been happening back in March 23rd to force them to delay their normally quarterly rebalancing? So effectively, we're getting 2 quarters worth of rebalancing in the S&P today, which is a rarefied event. I don't think that's ever happened before, at least not in recent memory. I have to go back maybe to around 9/11. I'll have to go check, but it's definitely been a while since we've seen multiple quarters of rebalancing baked in. So you're going to see a little bit more fund flows out in the S&P as a result out there, talking about some sectors getting big chunks. Obviously, financials not exactly doing too well. They're going to lose about 2%, a little more than 2% of their S&P share. Meanwhile, utilities set to gain about 1.2% of the S&P as well. So a little bit of a change going on out there. And, of course, all those folks out there who love to focus on quad witching. We don't really touch on that too often on the show because it's kind of been debunked as a big driver of vol, but still allowed some folks fixating on that as well. So there were some interesting things to watch even before this tailspin started out here in the marketplace. Let's head on out to the MIAX hot seat now. Tom, it's been a couple of weeks since you've had a chance to join us on the show. What's been lighting up your tape since the last time we chatted, and what are your thoughts on yet another crazy end to a crazy volatility week here, Tom?
Yeah, thanks, Mark. Well, I think there's a lot going on still. And I just want to add one thing to Mark's comments about the liquidity. I do think everyone's on a much tighter leash right now too. So as soon as things look a little bit, risky, it's just risk off so quickly that, and that causes those liquidity pockets, which everybody just fades everything. But I haven't been actively, trading in the SPX recently, so I'm not experiencing that as much. But you do see a lot of volumes moving over to the SPYs, and I think part of that's for that reason. I think you're seeing people use more like volatility trading algos and that kind of thing hitting the market, and those run better in the SPY type of products than the SPX itself. But otherwise, there's just I think a lot of the themes I've been hearing about is some decent call overwriting in single names, index call buying. As we know, everybody's been talking about the put call ratios for the total market. On the indexes, I think there was a lot of strategies going through where you had people selling on one downside to buy multiple upside calls. That last little market rally we had up to 3,200, there was definitely definitely felt like a big gamma squeeze to me. There was, we saw, the phrase spot up, vol up was definitely pronounced. And then today with the quadruple expiry, as you mentioned, the rebalances, there's always some volatility around that. And there's a lot of people talking about, month-end pension rebalancing and potential, like I've heard numbers, $75 billion to sell in equities, but we'll see how that pans out. Usually there's a lot of, excitement about it, and then it ends up being nothing. But, it's something to keep on the radar.
And Tom, you kind of mentioned SPY and the return of the SPX. One of the interesting narratives people have been wondering about and kind of scratching their chins over is, now that we've been electronic for the better part of a few months here, whether SPY would start to cannibalize some of that flow and even some of the complex flow and perhaps try to keep it over there now that the S is back. Obviously, the SPX has some favorable tax treatment that a lot of the sizable institutional players still favor and prefer. But I'm kind of curious, you guys do a lot with SPY, obviously, through the spikes lens and calculating your spikes index that way. Have you seen anything anecdotally or hearing anything that some folks have gravitated towards SPY maybe and they're not coming back?
Yeah, that's that's some good homework for me. But no, nothing anecdotal, but it definitely just from looking at the numbers and it just, and just knowing, a lot of the different trading desks out there, I'm pretty confident that, they, from my view, that they've migrated to the, Spider product. Like I said, you can run a lot more different strategies electronically through that environment than through the SPX environment. And now with the floor being back open, I think it's going to, hopefully pick up for those guys again. I'd like to see them do well. But it's definitely, from the pictures I've seen, it's a different pit. It's, people are spread out. I'm sure they're getting trades up, but it's it's definitely a different environment, very different from when I was down there, especially.
Yeah, today was, speaking of quad witching, there was some kind of a funny thing is my understanding was there was a really, really weird delta spread between AM and PM settle today, and lo and behold, we're up huge on the AM, and then we're now going to close near, on the lows, I'll bet, for the PM. So an interesting thing that, I'd not really thought about is the AM PM settlement around this kind of quad witching and how it can affect things. And so that's something that is on my mind in terms of how we trade today. And this being June expiration, meaning it is a really, really big one because, the options that are expiring right now in SPY, SPX, and some of the big indexes are several years old, right? June is what, the second one to list after December for the leaps. And so the June that's expiring has been around for 2.5 years. So we're going to have some open interest come off the tape, and it should clear up some margin for some firms, and should be interesting. But yeah, really, really something I'm going to add to my watch list is, okay, what's going on between AM and PM at these end of months.
Yeah, that's not a topic we usually dive into. Sure, we don't see a lot of huge size plays, but maybe that's starting to change again today. A little bit of an anomalous day here, of course, but still an interesting one to watch, I think, going forward as we keep parsing and analyzing what's cooking out here in the vol space. Let's head on out to the land where the Thompson twins hang their hats, a.k.a. the land of the mullets and the Tulums, a.k.a. the VIX futures term structure. Coming into showtime, we did see a pretty healthy, reasonable premium from that July future to the cash, about a little more than half a point, about 0.6 of a point. We saw the AUG future, actually, interestingly, a little bit less, so that about a 0.4 of a point. So kind of interesting shape out there in the futures versus the cash. And as the cash has moved up and as the curve has moved up about a point or so since the start of the show, we're still seeing relatively similar structure out there. But let's see if they of Alpha Seeker fame have found anything interesting out here. What have you guys been noticing over the past week in your home territory here of the VIX futures curve? Anything been catching your eye? Walk us through what you guys have been seeing in all things VIX futures.
Sure. Well, in the last week, let's include last Thursday's random act of S&P violence in the observation. Prior to that, the curve was begrudgingly getting back to more normal contango. It was getting, very close to kind of just giving up its higher numbers. And then you have a day kind of almost out of nowhere on Thursday where the VIX term structure is like just, I told you so, forget it. There's not buying into the S&P rally. Obviously, most of the action has been in the front in the October contract, pricing in that election bump. So it's been really, even though the S&P's rallied a lot off the low, if you just looked at VIX term structure, you would think that we're still down near S&P lows. So it's been the vol market has been the doubting Thomas market on this rally.
Yeah, you can see that in the vol ETFs, like the VXX. Obviously, everyone's favorite one to hate on because it decays all the time. There's really been very minimal decay in the thing this year. Obviously, it's down from the peak in just the total panic in March. But, spot VIX down 90, down to, 30 in the mid-20s at one point, and VXX is still holding in there real well. And that's just that backwardation curve we're seeing now. And it's, like I keep saying, it's wild to casually see numbers in the mid-30s all the way out the whole curve. That's like almost 2008 levels, and it's just kind of been hanging out there all year so far.
One of the nuggets that we talked about a lot before all this other madness took us over in February was this odd little blip, this persistence of vol out there around the election time frame here in the U.S. And in spite of the fact of all this madness and the crazy sell-off, that blip, if you can call it that, has persisted and maintained itself and been kind of interesting to watch its evolution and maybe even gaining strength despite the fact of everything else been going on out there. Has that caught you guys' eyes as well, that the surprising dogged persistence of the October premium out there, or the election premium in VIX futures?
For sure. I think, you saw that even in January before the COVID crisis kind of took over. You saw that October bump out there. And I think the utility of that October future has increased because that election obviously is still there. And then that could be a decent place for a second wave, if it comes, a second wave to hit around that time frame. If you use the Spanish flu as an analog for the calendar. So there is a sort of a floor bid underneath that October future, and then with an extra potential kicker of a second wave of COVID. So it's understandable, why that bump persists and grows.
Yeah, it was interesting. I saw, I think Russell Rhodes posted it on Twitter that he was noticing the open interest in puts in the October strikes is actually higher than the calls, which is unusual, right? So I think a lot of people are noticing that same persistence and trying to hammer on it, but we'll see.
You're right. That time of year has taken on a little bit different resonance now with the looming specter of a potential second wave of this virus. So you're right. It isn't just election vol anymore. That could also probably speak to why it still persists out there. Mr. Meatball, anything else on the VIX futures term structure before we head on into the options land, sir?
Yeah, I literally wrote this in kind of the piece that I put out every day that, the VIX was at a crossroads as of yesterday. It needed to make a move because it had been so incredibly flat for several days, and it just simply doesn't do that. You don't see a scenario where the cash is the same as the July future, is the same as the AUG, is the same as the September for, any real amount of time. You need the vol to pop or vol to drop, and I think we see the decision that was made by the overall market. Volatility absolutely making a big pop, and this feels like a day that liquidity stinks, and we could see the curve really make a nasty move today as people race to hedge themselves. So the end of the show can't come fast enough because I'm worried it could actually blow through my amazingly accurate VIX prediction.
Yes, I need a little more upside on my prediction here. It might be a rare day where we extend the show a few hours. Let's see how that works. Before we head on out into the options scene, Tom, obviously things are still kind of wait and see mode down there in DC. Catch us up really quickly. What you're seeing, what you're waiting for, a little bit of an update on what's cooking in all things Spikes futures, sir.
To what the Thompson twins mentioned, things obviously got a little delayed as well with COVID-19 and everything being put on hold and the market turmoil. So we're still waiting on some news on the futures launch date and final approvals. So to be determined. We'll come back and hopefully we'll come back with some good news soon, but we're still waiting on that. And just one quick comment on the term structure. I think it looks like it's priced to perfection, to be honest. I mean, it's just, where 30-day options are trading 27.5 in the S&P. We're realizing 27.5, and there should be a bid to this vol term structure overall, just because there is a lot looming. I think a lot about July when unemployment checks run out, earnings. There's just a lot of stuff. Possibly a second wave. So I'll leave you there, but thank you for that, Mark.
Interesting. That's what makes a market, right? We like it. Price to perfection. We don't hear that too often out there in the land of all things volatility futures. Let's head on out to the vol options, see what's popping off out there. Not as much as you might think, listeners, given the fact that the worm has turned pretty aggressively even since the start of the show. I think coming into showtime, there was about 120,000 contracts on the tape in VIX land, and as of a few minutes ago, it's up to 141,000. So it's not like a flood of order flow has piled in. Maybe some of this Harkening back to what the meatball was talking about with maybe some of the market makers heading for the hills and widening out. Maybe that's why we're not seeing so much flow. Either way, not a ton of paper lighting it up out there. Still net on the week, it was a busier week. ADV is crawling up there. It's up to about 416,000 contracts out there in VIX land now. It puts it up about 30,000 contracts from where it was last week. Let's break down the top 10. Obviously, a lot of June rolled off the board, so we got a little bit less OI out there, only about 5.25 million out there. So it only cost you about 80,000 contracts to break into the top 10 in VIX land. So if you always want to see yourself in the top 10, now's the time. Get out there. It doesn't cost you much at all. They get you all the way to the July pars. There's 80,000 of the July pars still open out there, which is fascinating in and of itself. Number 9, 80,000 as well. Only like about 20-odd contracts separating them for the July 45 calls. And then number 8, 85,000 of the July 22 puts. Number 7, 90K of the July 20 puts. Number 6, back to the calls, 91,000 of the July 35 calls. Number 5, $1.02 of the AUG, the only AUG on our list, which is interesting, the AUG 60 calls. Number 4, 114,000 of the July 28 calls. Number 3, back to the dark side of the puts, $1.15 of the July 30 puts. Numero dos here, 119,000 of the July 32 halves. And rounding out the top of the top 10 here. It only costs you $1.60 to top the list. That gets you to the July 25 puts. If you're wondering about 60-40 calls to puts, so not quite as biased in the flow and in the top 10 as it was last week. So interesting stuff out there in all things VIX land. Not a ton of paper, like we said, today coming right a few minutes ago, about 141,000 contracts. The big prints as of the start of the show were the AUG 28 puts going up a whopping 15,000 times. That was kind of about it, and about 5,000 of the July 37 halves and about 5,000 of the AUG 32 halves. So maybe a little bit of a funky diagonal there. Thursday, a little bit more active, but not much. 178,000 contracts on the tape. The big print was 12,000 of the July 27 puts, and then about 8,800 of the July 45 calls and 8,600 of the July 30 puts. So maybe a bit of a funky risk reversal. 30-45 out there in July. Kind of interesting out there. Wednesday was a more active day. Almost 500K on the tape. The big print, 43,000 of the November, going all the way to out to the Nov par calls. What were we just talking about? We were just talking about the bid to these far off portion of the term structure. It's like somebody's playing up there again and doing it for size, about 43,000 contracts of the pars up here, as well as the 65s going up 41,000 times. So maybe a Nov 65 par vertical up there. That'd be an interesting one. I like that better, obviously, than just going to play on the pars, but interesting stuff afoot out there. Also almost 33,000 of the AUG 28 calls and 32,000 of the AUG 28 puts. So maybe a bit of a conversion reversal or perhaps indeed a straddle going up out there. Tuesday, a little bit more, is the most active day of the week, but not by much. A little north of 500,000, 510,000 contracts on the tape. The big print's about 40,000 of the June 37 halves and 36,000 of the June 35s. So maybe a bit of some verticals going up there as well as about 24,000 of the June 30 puts. Monday, actually, I take that back. Monday was the most active day with 583,000 contracts on the tape. The big print, almost 44,000 of the June 37 halves and about almost 41,000 of the June 50 calls, followed by almost a little north of 40,000 of the OC 22 puts and OC 23 puts, doing about 40,000 each. So maybe a bit of a funky vertical, funky roll out there, but some size out to OC. So we're seeing OC, seeing Nov starting to peek in this week. Interesting strikes, interesting months out here. Mr. Meatball, anything catching your eye out here in an otherwise not that crazy week here, given what was going on in the market?
Yeah, you bring up the par calls. Those are 30 cents. And that's because they're so bid up. And they're, you can buy the 50 calls for about $2.30 for about what? $2.35. If I was looking to set up some sort of static hedge for the month of July, the 50-100 call spread for, around $2 to me is a pretty nice hedge for a portfolio, inexpensive, and truly does give you that crash insurance. If we see the VIX go back into the 70s, this spread will be $10, $12, $15 or maybe more, and it just goes to show you how out of whack those way out of the money calls are.
Yeah, that's a pretty hefty bid for the par strike in any month, let alone so recent out there. And again, probably why some of these verticals are lighting it up. If they're gonna give you that much to just put on that nonsense leg of vertical, then why not take it? Speaking of nonsense, let's see what kind of nonsense is afoot out there in the vol ETP that everybody loves to fade. Maybe not so much right now. It's VXX. Coming into the start of the show, it was feeling the fade yet again. It had spiked to over 44 not too long ago, listeners. Now down to 36.75. That put it down almost 6 handles, about 5 3/4 handles from our last show. Of course, as the show has progressed, it has rallied up to about the 38 handle again, which puts it down obviously about 4.5 points net from our last show. So we need a little bit more lift out there, but I could take what I'll get out there from a vol perspective right now as we're coming close to my crystal ball prediction. Let's see, coming into showtime, we've got, there was about 146,000. We've seen more paper flocking into VXX since then, up to about almost, not quite 250,000, about 225,000 contracts on the tape, which is pretty close to the ADV of 236. So VXX starting to light it up out there. Let's break down really quickly some of the top trades out here. Let's see, top positions really quickly. Let's just do a top 5 because we kind of come up against it. Number 5, 54,000 of the June 16 puts. Looks like it's pretty much all puts all the time, listeners. 80-20 puts to calls out here. Not exactly surprising. Number 4, 56,000 of the June 23 puts. Number 3, 63,000 of the June 31 calls, the only call in the top 5. Number 2, 96,000 of the AUG 30 puts. You know what the other leg of that is, listeners. A $1.05 of the AUG 22 puts. That's our friend with that size put spread he put on a little while ago. Was looking good again until maybe right now, when it's looking a little bit less good right now. Pretty active out there. June 35 puts lighting it up out there today to the tune of 11, almost 12,000. And the June 37.5 calls with about 9,000 there. Interesting stuff afoot out here. Mr. Meatball, anything going on with your crazies in VXX land this week, sir?
Yeah, we were just looking, and the vol's been relatively inexpensive in VXX. So I actually, in one of my my letters, put out a VXX straddle trade because I think that there's real potential for the vol to go to 150, 160 in this thing, and for it to make an outsized move.
Wow, not too long ago we were talking about how expensive the vol was out there, right? And to stay away from it unless you have some other short legs accompanying it. Now, riding up the straddles, how the warmest turn, sir.
Yes, indeed.
Interesting stuff.
Indeed.
Check out the Vol Legion over there in the Vol newsletter, over there in Option Pit Land to learn more. Since we're talking about newsletters and legions and all that good stuff, not a lot really popping off on the earnings front. We talked about a lot of them on Option Block this week, unless you're really excited about Darden restaurants. Not a ton to check out. You can check out the earnings season report over there on the Options Insider. We still keep updating that with new data from our friends over there in ORAT's land, and it is still looking overall light. Overall earnings season vol came in at about, or movement, I should say, came in about 90% of the vol that was priced in. So they were fading vol, and looks like that was the right play in spite of all the other madness that has gone on over the course of this cycle. And speaking of madness, let's see what madness you guys have in store for us. It is time to open your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, let's get to it. A lot of you guys sharing your thoughts and ideas. I want to start with this one here from the intriguingly named Parasol, because we got the Thompson twins on, and this is right up their alley. Parasol wants to know, why are VIX futures trading so little these days? Would seem to be a boom time for volatility trading and volatility trading products. Matt and Mike, this is the trend we've been talking about for a while now. Every time OCC puts out their numbers of the futures they clear, it's down precipitously from a year ago. Ridiculous level, 50, 60%. We all got used to the initial crush of VIX futures volume after products like XIV went the way of the dodo. There wasn't a lot of demand for rebalancing, but here we are in a fairly volatile environment, and yet VIX futures not really keeping a pace. I'm curious, and it sounds like Parasol is as well. Why do you guys think the futures volume is so anemic right now?
Well, I think it's probably a multitude of reasons, like everything else in this business. But the vol term structure isn't providing a huge edge right now for a lot of like automated or systematic strategies. It's a little more of a kind of a roller coaster shape as opposed to the nice term structures that we're used to, whether they're backward or contango. And the prices of vol are pretty well priced right now, right? So there hasn't been a lot of edge to play on the curve. You've seen that in kind of the flat type of price action in VXX and SVIX over the last couple of months, even with the rally. So it could be a case that people have their hedges in place and there's not much to do with the whole term structure priced above 30.
Yeah, and obviously people just want to own bankrupt IPOs now. Forget about vol.
Are you saying Peloton shouldn't be at all-time highs, sir? Is that what you're throwing shade at those housewives who are biking away in a pandemic, sir? How dare you? But Tom, this might be, I was teasing you earlier, but this might actually be the proof that backs up your point. You were just saying a few minutes ago that you think the VIX term structure is pretty perfectly priced. Maybe, as they were just alluding to, maybe the lack of volume is kind of emphasizing that point, that things are fairly priced out there right now, and no one has any edge to really do anything, hence the low volume. I guess you can take a victory lap for this one, Tom.
Well, I was going to say, if you think about it, a lot of people, I call them roll down strategies, call it short VXX. But those things are just not lining up right now for a lot of reasons. And, just people I talk to in general are just like, there's not a lot to do, even though things are moving around. But from a vol perspective and playing, relative value vol, or however you want to look at it, term structure vol trades, it's just not very obvious.
Yeah, and it's kind of befuddling to a lot of our listeners. It sounds like Parasol is in there as well, but maybe things are just that well priced out there right now. And again, you don't have those things. Maybe if this SVIX comes back into play, maybe that'll drive it. Maybe once the Thompson twin machine gets up and running, they'll be churning and burning the futures, and we'll be talking about a different story out there. We got some related questions here from ML at $ and Melon. Both of them want to know kind of about the floors. We were just talking about this earlier in the show. ML at $ wants to know, are you guys psyched for the VIX pit to get up and running again? And then a similar question from Melon wants to know, have you guys seen an uptick in SPX and VIX paper since the pits came back? Well, they haven't been back that long. It's been pretty much about a week. And so far, we know every week is very different from the last and kind of insane in its own way. Every week is a kind of microcosm of madness unto itself out there, it seems like, these days. And this week is no exception. I just pulled up the numbers right as we're talking here. And the ADV and SPX has ticked up a little bit. It was threatening to break that 1 million handle, maybe got a little bit below it, I think, actually. And now it's back up to about 1.17 million. And so far, it's almost at exactly that right now, about 1.07 million out there. So maybe we'll see if we get a little bit of more vol events out there. Maybe we'll see a little bit more paper driving that back. Although, Mr. Meatball, it sounds like from what you're seeing out there, maybe you'll take the opposite side of that. You think a little bit more vol comes back into these markets. You'll think maybe even though the pits are back, we're not going to see any flow. What do you have to share here for ML and Mr. Mellon about what you're seeing now that the pits are back from a flow perspective, sir?
There's been a slight uptick, but it's going to take a little bit for that flow to start coming back. That's really the key. Is it just doesn't magically appear, but you definitely, it will facilitate some of the more complex stuff to start trading again. And I think you're going to start seeing things pick up more and more over the next few weeks. It's not going to happen with a snap of the fingers. This is not Thanos magically, the Thanos snap of the floor's closing almost magically made 50% of the paper flow disappear in the index options. But you can't reverse Thanos that snap like they did in the Avengers. I think it's just going to take some time for that paper to come back.
Yeah, it's only been a few sessions here, Parasol, so we can't really prognosticate too much. A lot of you guys were chiming in. Looks like our buddy's been on the show many times, Mr. Lincoln of Short Vol fame. He got the vol side of Twitter, a Twitter, pun intended, with a question which seemed kind of a straightforward question to me, but everyone was just just getting all hot and heavy about this one. He asked a question for all you VIX experts. How high does the market need to rip to the upside for the VIX to go unchanged on the day? A lot of people chimed in here. People have been on the show many times. Jim Carroll was on the show last week. He chimed in a really good question. Most people would think there's no chance. 5% might do it. Ewan Sinclair, another friend of the show, been on many times, said you could subsample the data a lot of ways, but usually the times when both the market is up and VIX is up. It is a small move in the S&P, average 0.4%. Both up, with the S&P up more than 2%. Has only happened 11 times total, so it is a bit of a rarefied event out there. A lot of people were chiming in on this. I like some of these names out there as well. Zafod says if it stays up above 3%, you think it shouldn't drop, but depends on the options buying. OTC VIX Pro says VIX up unched with SPX up big is a rarity. That happened only a handful of times in historical record. Most recently on March 24th, biggest discrepancy he found was March 17th of 2003, with the VIX up about 3/4 and S&P up over 3.5%. Interesting. Notably, this was the day the World Health Organization issued a warning for SARS. So a little bit of pandemic prelude over there on all things going on out there. So an interesting question, Dave. A lot of you chimed in. Check it out if you haven't. Thompson twins, you guys have any thoughts on this one? How high does the market need to rip to the upside for the VIX to go unched on the day out there? An interesting thought question that apparently has the vol side of Twitter, all the Twitter gents.
Yeah, I don't have any sort of pinpoint estimate, but there is a good kind of historical analog to look at in the Nikkei. So in 2014, I believe, it was October 2014, they started an extra QE on steroids. And the Nikkei VIX, Nikkei futures term structure went backward as that market crashed up. So you can look at that analog, if you have access to the Nikkei futures. And so that definitely was a period where there was either a tremendous grab for call options or covering of overwrites and that kind of thing. So there is historical precedent in other major markets. So I think it was October of 2014 through maybe the first quarter of 15. The Nikkei curve was backward, vol rising alongside a ripping Nikkei.
Yeah, and if I had to guess, I'd be looking at the options skew, and it would just move from puts to calls almost in that scenario. And it's just the world turns upside down for a little bit.
I like it. As the world turns in the vol space. So we have to keep on going with our final segment. It's time to get dangerous. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the Crystal Ball, the portion of the show where we attempt to prognosticate what the heck the vol gods have in store for us for the coming week. And I just did not have enough time, listeners, for the market to catch up with my vol prognostication. I have a feeling if I had a few more sessions, I probably would be a little bit closer. Of course, Jim Carroll took the top spot as terms of farthest away out there. He was our guest last week. He picked a 45, and coming into the end of the show now, we're seeing spikes at about almost 33 even out there. Yeah, about 33 even, and VIX Cash a little bit north of the 33 handle out there. So he's about 12 handles away. I was at about 42.25, so pretty much within 10, but our benchmark is usually a point. We've discussed revisiting that given these very tumultuous markets we're in right now, but so far not within anything close to a bullseye. Certainly 10 points ain't going to do it. And the meatball was actually the closest this week. He was at 35.35. So he was feeling the fade. He was a little bit more than 2 handles away. But Mr. Meatball, given how crazy things are, I will give you that victory. So I will allow you to choose. Would you like to go first, or would you like to choose who goes first, sir?
Oh, let's let the Thompson twins go first then. Then Tom, then me, and then you.
All right, then. Thompson twins, you have been invoked. You've been given the rare privilege / dubious honor of going first. So which one of you wants to go first? I think you both need to play, so you both need to make a guesstimate. But who wants to go first? Have at it.
All right, this is Mike. I'm going to go 39.
39 even. Okay.
Yeah. For Matt, I'll say just because this pisses people off so much, I'm going to use the 100-day moving average on the spot VIX index at 36.38.
All right, 36.38. We already got an interesting market shaping up just with the two twins out there. I kind of like it. All right, I do believe, Tom, you were invoked next, and you didn't get to play last week, so you don't win or lose. You get to slide in there. Tom, what are you feeling for this time next week in spikes and VIX?
I've always been pretty bearish on the vol since, the spikes early on, but now that, the market rallied past 3,000, and I'm personally a little bit more bearish side now. I'm going to go with a higher VIX and spikes, about we're going to go just slightly higher though, but I 34.22.
Interesting. I like the precision. 34.22. All right, Mr. Meatball, I believe you designated yourself to go second to last, so have at it, sir.
Well, I think that we are gonna see a potential run at 40 next week before we end up right at 33.33.
33. Odd doses of precision all around out here, Yeah, I definitely feel more upside, obviously not just today, but for the next few sessions maybe before we start retesting anything else out there. I kind of liked where I was last week. Obviously, I'm not sure if we can maintain that level, but I think we're going to be on the upside. So I'm going to play the upside roll this week. I'm going to dial myself back a little bit. I'm going to say 40.5 on the upside. So you got me planting the flag on the Everest to the upside there, 40.5. Then we've got on the downside, we've got the Meatball 33 listeners, and in between we've got Tom at 34.22, Matt at 36.38, and Mike just peeking up the hill at me there at 39. All right. Unfortunately, that music, listeners, means we come to the end of yet another journey through the world of all things volatility. What a crazy journey it was. Thought we had one show maybe setting up. Then the show started, and as the vol landscape likes to do, it shifted. We had a little bit different show towards the end. We'll see how this vol plays out for the rest of the session and indeed into the early part of next week. We may be in store for a little bit more vol to come, listeners. Should be interesting stuff. Let's go around the horn. Let's start with our guests again. Gentlemen, if folks are intrigued, they want to check out the Alpha Seeker and indeed your new fund, where should they go? What should they do, sirs?
That would be LHAfunds.com. That's Little Harbor Advisors is the manager on that fund. LHAfunds.com.
And hit us with a ticker again so the folks can go out there and check it out for themselves.
MSVX, Mary Sam Victor X-Ray.
MSVX. We got a new vol product to add to the rotation, listeners. Check it out for yourselves. MSVX, if you are so inclined. And I guess if you're listening to a show like this, you probably are pretty inclined. So all of you out there are saying, hey, we need something new to trade and sink our teeth into. There you go. MSVX. And Mr. Tom, same question for you, sir. What is going on in the world of MIAX? You want to leave our audience with any hints, any teases, what you guys have up your sleeve? And also, where should they go if they want to learn more about what you guys are up to there, Tom?
Well, I can't let any secrets out because I don't really have any. And if I did, I couldn't speak about it anyway. So if you guys want to learn anything about the Spikes product or MIAX in general, it's MIAXoptions.com/spikes. And just quickly, I want to wish Matt and Mike much success in your new launch.
Thank you.
Yep, appreciate it.
Always fun to see new products in the vol space, and we hope they all take off and resonate. Again, challenging time to be launching that, but glad to see that it is out there and indeed trading. And last but not least, or he says sometimes he is the least, I'll let it be up to him to judge. Mr. Greasiest of Meatballs, sir, if folks want to check out the Vol Trading Club, the Pit Chat, the Legion, all this good stuff, where should they go? What should they do?
Go to optionpit.com, sign up for our newsletters, and you'll get all kinds of great content you want to read.
All kinds of great content you'll want to read, optionpit.com. You know where to go. Many of you already have. If you haven't done so for whatever reason, optionpit.com, the place to go. And on behalf of the Greasiest of Meatballs and the Thompson twins and Tom and the rest of the crew over there at MIAX, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for listening live, for sending in all your questions, for leaving reviews on your platform of choice, all the fun stuff that you guys do. Keep it coming, and we'll see you back here next week to kick off the whole recording and broadcast week again on Monday with the option block, all the way through to Friday, where we're back again for more Volatility Views.
Volatility Views is brought to you by MIAX. one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.